So I took a trade on this particular pair US oil. So why did I get into this trade? I got into this trade because I since I, I had a zone around this region, so I was beginning to see rejection around this area on my 15 minutes time frame. So 15 minutes time frame, I was seeing rejection around this zone. So I considered this particular candle to be a rejection candle. Then here a change of character to the downside. Then a sweep of an inducement into the zone. Now, then I took this as my stop loss and my entry candle. My entry candle was this candlestick here. I took it as a bearish engulfing candle. A bearish engulfing candle. Now I entered the trade and this is what I got. I got stopped out. But then let's go back to our weekly time frame so as to know my weekly bias if I actually gambled on this trade or not. So on my weekly time frame, what I can see here exactly is a total break of this particular support zone. Now support is turning into what? Resistance. So price has been able to break with a very strong candle to the downside. Then we have seen a retracement into this region. Now this is our weekly time frame, present weekly time frame, and we close with a bearish candlestick last week. So from the projection, I am supposed to see a little bit of retracement either to the midpoint or to the extreme point of our supply zone. Now marking our supply zone, I have this to be my supply zone. This candle here, this one with this red candle as my supply zone. Now let's head over to our daily time frame. All right, welcome back. So this is the midpoint where I marked these two lines over here. This is the midpoint I was actually expecting this market to get into, and I failed to allow the market to get into those positions, probably because I was eager to enter this trade and I never wanted to miss out on this trade. But then we are here to learn. Now price from our daily time frame of yesterday, we saw this engulfing candle, meaning that price is actually ready to move to the upside, which it is already doing. So the best I was supposed to buy the market if arms to scalp it, but that's not my strategy. I would have allowed the market to do its thing into my already marked out weekly zone so as to afford to sell from there. Now I'll go over to, let me mark out this candle here, this zone here. Marking out this zone here, I will change it to, okay, so I'll be able to know that zone. So let's go to the 4-hour time frame. So sorry, my chart is a little bit messy, but all for the explanation. Now you see price on the 4-hour time frame is what is moving to the upside. It's moving to the upside, right? So since price is moving to the upside, what do we see now? Now this was that this is sorry. Okay, so this is price. This is our high for yesterday, which is Monday. Today's Tuesday. This is our high. Today is Wednesday. This is our high of yesterday, Tuesday. Now, I actually expected price to take out the previous high or sweep out the previous high into our zone. Remember, this is our zone. I will remove this line here because I will take the extreme point, which is this zone here. So how getting into this trade for me was it was not supposed to be, because probably I was actually trying to scalp or not want to miss out on any move, but I had a move of a sell, and if price had gotten into this zone and I saw my change of character and every other confirmation I need to see, I would have taken this proper sell. But then look, we have a trend line here where we have our first touch, second touch. Now the trend line is what is in confluence with our point of interest, which is on our extreme point supply zone, where we're supposed to what sell to the downside. So I believe I made this mistake, and I know it's not going to repeat itself again. Thank you for watching.